All right, guys. So we just took a stop loss, right? I just took a stop loss on a particular VIX 10 index trade. Now the stop loss isn't my problem, and for this stop loss, I was, pretty much expecting it because of what I noticed from the Reef or with the Reef trading broker right now. All right. So this is the setup. This is the setup for those of you that trade SMC or for those of us that understand my trading approach. You know that this setup is clean and simple. And yeah, it is also in the market that setups do fail. All right, setups do fail is normal. But what I'm going to show to you guys is going to tell us why, though this setup failed, but the entry was persuaded by the brokerage for us to be able to, for us to get liquidated actually. So let's hop on the chart. Let me get to explain to you guys. And after that, I'm going to show you guys why I said they actually cause a persuasion so that they can be able to liquidate whoever or whatever type of traders will look to take trade on that significant order block right there. All right. So let's hop on our chart and let's get to break down this particular setup. So this is the VIX 10 set. This is the VIX 10 setup. All right. For better understanding, I'm going to go through the whole analysis and how I was able to, reach the conclusion here that from what the technicals have given that yeah, we should be able to get a sell trade from that end. Okay, so let's go through the whole analysis. First of all, I have to start from the hour time frame. So from the 1 hour time frame, I'm going to understand why I've been looking for that short or I took that short based on what the broker or what our analysis had right there. Okay. So for those of you who understand my trading system, you know that all I look for is break of structure, internal liquidities, and then uh, point of interests, right? So significantly, this is a break of structure to the upside, right? So price broke through this previous significant swing, and this swing is significant. Why? Because it took a significant liquidity, internal liquidity right here. For those of you who don't understand our trading system, look into our videos, look in the channel, then you get to understand how we roll or how we trade with the advanced smart money concept. All right. So we have a breakout structure right there. So we know that now from our 1 hour time frame, price should be what looking to come back to take our internal liquidities, the significant pullbacks after a break of structure. So we have this significant pullback, right? We have this one, we have this that significant pullback. There's no other significant pullback until this particular level here, another pullback, and then till the current market area. Why is this not a pullback? Like I said, if you want to understand, please look in the link in the description. Join our free Discord community or look into our videos and then you get to understand why. So this is the significant pullback. This is a significant pullback. So prices to come to interact with this, the first pullback is always liquidity, right? So we know that this one price is definitely going to take it, and then we start looking from here any significant point of interest that price can react on. And for me, I had a point of interest right here. Price can react to this because this is another block. Price can react to it and then give us a continuation pattern or a continuation impulse. All right. So this is the confluence, and this is why I know that we should be looking for price to come down. All right. So this is directional bias. So I'll hop on the 5 minute, which is the medium time frame, to get to understand or to get to see the current market and see if that direction has started or price have started going towards that direction, then we can also capitalize. The trend on the lower time frame has to change to what you are looking at before the higher time frame can also join the trend. Okay. So from yesterday, today is 29th. From yesterday, we had a signal that yes, that particular drop is going to be happening soon, which was a sweep here on this particular structure right here. So we had a sweep, meaning that what we should be looking for downs. So after a sweep, in here is a change of character for the sales, right? And then you can see that price came to mitigate this order flow. For those of you who were active, I took this trade as well. Price mitigated that order flow, and then we had what another break of structure right here. So this has become so these let me mark it with this guy. So this is a what a high, right? High. We have a higher low right here. So this has now become the new downtrend. And then this is what the low. This is the low. This is the lower low, right? So we have another lower low created right here for this particular trend that I've started. So we was expecting that this trend would be like higher highs and higher lows like that to continue, giving us those higher highs and higher lows till we get to our 1 hour target. or our 1 hour point of interest or liquidity level. So we would have been, capitalizing on this move until we get to our 1 hour point of interest. But what happened is that price gave us a change of character. Why? Because it closed above a significant uh, lower high. So this is a high, this is a lower high. So if price closes above a significant lower high, it becomes a what? A higher high, meaning the price direction has changed from what? From higher lows to lower lows, from higher lows and lower lows to what? To higher high. So this is a higher high, meaning we're looking forward for buys now. So this is a break of structure here. You can see price closed above, even if it's just 1 2 3 candles. After that, it traced inside and it went significantly above again. So we had a change of character right here. So after a change of character, what we look at, or what do we look for? Significant pullbacks, so that we can get our liquidity level and then look at price to pull back to that liquidity level, and then we can look for continuation. So for this, we have this one like so, then we have this, right? So this is the first liquidity level, and if price takes it, we should be looking for buys or the upside. So after price took the first liquidity level, what next? We should be looking for the point of interest. Point of interest that was found here is what? Order block. Another block was found here. So price mitigated that order block. For those of you that saw the video earlier, sorry, the chart earlier, this also was a trade I capitalized on. So the order block was mitigated, and then price gave us a push. It was 1:3.5 for me, and I was out of the trade. I'll be talking about my trading edge in subsequent videos, so keep watching our channel. If you are yet to subscribe, please don't forget to subscribe to the channel. Okay. So we had that push, and then since we have mitigation, the target is where? The target is here. Okay. The target is right on this high, because this is the last this high shifted to be this high because this is the highest level. So we have a lower high, we have a higher high. So now we have what? A low right here. This is not what I'm using. So we have a low right here now, right? So these are our lower low have shifted to this low, right? We have that low, and then it now created what? A higher low right at this level. Oh, it's created a higher low right at this level. So now we are what? In an uptrend. A low, higher low, a high, higher high, right? So we're now in an uptrend. So when price took out from here and then went above this one, this swing point became valid. So it became what? A significant higher low. And then our target is for price to get to the previous significant high. If it breaks above the high, then we should continue in that uptrend. If price sweeps it just like it did, then we should have reversed into a downtrend, because after a sweep, we look for a change of character just like we did right here. So we had a sweep of the high, meaning our trade here met take profit, right? It met the take profit, and then we had a change of, we have a sweep. So the moment price sweeps a particular swing point, what next we do is look for a change of character again, because meaning the first significant push became a swing, right? The first significant retracement became a swing. So character was changed right here, and then we started looking for downtrends, okay? And if you also want to cater for it better, you can use the lowest low here as the significant change of character. All right. So character was changed here, right? And then we start looking for what? In just like we always look for. After change of character, you look for significant pullbacks, and then after the first pullback is taken, from there you start looking for what point of interest is. So these are the significant pullbacks. We have one, two. We have the third one before the main swing point itself. All right. So this is where the reef got fishy, or this is where the reef made us execute a trade that is not supposed to be executed. All right. So clearly here we can see that based on our order block criteria, we can see that this order block is not mitigated, right? This order block is not mitigated, just like this previous order block is not mitigated by the second candle after it. The first one is cool to mitigate it, but the second candle creating the little imbalance should happen. So it shouldn't mitigate it, right? So over here too, on the trading view, price didn't mitigate the OB. Okay, so this is definitely going to be a big or a huge target for every SMC trader who would understand exactly what I've just explained to you from the 1 hour time frame down to this time frame. This is going to be a very good sell signal, because the OB is, the order block is so significant that it took the previous candle liquidity. Let me take out the marker. It took the previous candle liquidity, right? It took the previous candle liquidity. You can see it there. It's higher than it, and then it has imbalance in front of it, meaning there's a gap between it and between the second candle that came into it and any other candle. So it has imbalance right there. You can see there's a gap between. So that is FVG or imbalance, meaning that this order block is as valid as a very good significant order block, and it happened at the extreme. So too many confluences was agreed upon on the trading view. Too many confluences was agreed upon. That is why the trade was called. So we have this order block valid at the extreme. This is our extreme POI. This would have been the decisional POI.
It's 2 o'clock.
Thank you, Samantha. This would have been the decisional POI if I was to take from there, because this is another block too. This can't do this. Dojis kind of like this. This is another block too. It has imbalance. It took the previous candle high, so it's another block. So this was the decisional POI. Definitely, if it fails, it's normal. But this one, unmitigated here. This one I want you to pay attention to it. This was unmitigated order block. All right, on the trading view. So this was unmitigated order block. Now let's hop on my phone and let me going to show you guys the MetaTrader version of what Deriv gave to us.
Alright guys, so this is the VIX 10 and this is the 5-minute time frame. Okay, so we are not going to stress to go back to the 1 hour because this video is going to get too long. So for those of you, as you can see on the chart and you can see on the phone too, right, this is where we got our order block. Okay, this is where we got let's talk about this. This is where we got the sweep, right? And then this is where we got the change of character right here. This is where we got a change of character, right? So this was the pullbacks. This is the first pullback right here, right? The second pullback, this is the decisional POI here that you saw on the chart, and then this is the order block candle, right, that we had on the chart. This is the order block candle. Why did I say the riv is getting the riv is now getting fishy? I said this because if you look at this order block candle on the MetaTrader 5, you can see that price mitigated it. Look at this area there. Price mitigated it on the MetaTrader. Look, price mitigated it on the MetaTrader, whereas on the trading view, price did not mitigate it. This is not funny. This is fishy, because on the trading view, the trade was too clean for anybody or any trader who reads market, who read the chart, who read price the same way I read price. It's too clean and easy for you to want to execute that whole trade, and this is why we also need to pay attention to risk management. So the moment I saw this when I came to execute the trade, actually I saw it, and that is why the risk I put was very small like that, because I don't understand why Deriv is the one providing the trading view. They are the one providing the trading view, not other broker, and we are trading on the same broker. I don't know why we should be having price or chart differences from what is on the trading view. Deriv is the one implementing that trading view. All right, and then they are the one also giving us the brokerage to trade. If we were reading, let's say, just like the other regular people read on Oanda, sometimes if you go to the general trading view, some people read on Oanda and then they are trading XNext or trading FXCM. If there's slippage between brokers, that one would have been understandable. But this is fishy. This is fishy. I've never noticed this for the past 4 years I've been trading with Deriv. This is fishy. This is fishy. I don't understand why they are doing this. Price has mitigated on the MT5, but price did not mitigate on the trading view. And this is just like a market trick or trap for people to always get liquidated. All right. So I'm going to let you guys in the comment section to say your mind about Deriv. Do you think Deriv is a scam broker, or do you think Deriv is not a scam broker? Thanks for watching and stay highest.